Hello everyone, and welcome to another update to DJ Forex House. Happy New Year to everyone worldwide. It's been very long. We had a YouTube video. I have been in study mode, and I just concluded my university studies, so I'm basically more free now. And you guys will be seeing more videos on the YouTube henceforth. Okay, so today's video I'm going to be telling you guys some of the basic rules I use to identify higher time frames when I'm making my analysis, and how I use them to travel through time frames to identify key points of interest and basic POIs to trade from. So some of my basic rules are when trading from the higher time frame, I don't go from the lower to the highest, basically when I'm analyzing or when I'm trading. Okay, so many people make this mistake. When they're trading, they go from the lower time frame to the higher time frame. No, that's very wrong. And that could also make your eyes get kind of like corrupted, because you start seeing things on the lower time frame and then you are bent on those POIs. So when you go to the higher time frame, it's a lot difficult for you to identify those stuffs on the higher time frame. So I use the higher time frame to the lower time frame, and basically I start from the monthly. This is mainly when it's a new month, like we are in a new month right now. And if I was to analyze GBP NZD, which is the pair you're seeing on the chart, I go to the monthly time frame, and then I identify those key areas on the monthly time frame which I believe price could be reacting for. So when I do that, I basically identify those areas where price is already rejecting from, and those discounts or premium areas which are more efficient on maybe my Fibonacci tool that price could be reacting from. So after doing that, I head to the weekly time frame, which I then use to identify these structures. All right, the structures of those reactions I've just identified on the monthly. I use the weekly time frame to identify those structures and also guide myself down to the closest POIs within at least the past 5 weeks. All right, this is my rule number 2. All right, when trading from the weekly time frame, make sure you don't go too in depth on the structures, because each candle you see right here represent a week. All right, so we are not going to be trading that long because it's a day trading. This can also be used for swing trading, but basically you don't need more than 5 candle data to help you identify what you're looking for. All right, so when you get too in depth on all these structures, you could get very confused, and that could lead to a lot of confusions. So what I do is I pay close attention to the past 5 candles. As you can see, 1, 2, 3, 4, 5. All right, so we'll start from here because we can see clearly that was where the trend started from. And I pay attention to mainly the data as these 5 candles present. For example, we can see within these past 5 candles, we had a break of structure, which identifies that price has been bearish. As you can see, we have more bearish candles than bullish reactions. Outside that, where are we coming from? If we were using the monthly time frame to identify key areas, we would clearly identify this as a resistance point, and also identify this as a resistance point. Okay, and if I was to draw, let's say, identify some of these areas within this range that I believe price will be reacting from, I would say we might see a structure from here. And having another one here. All right, so this would be an internal structure which we can identify on the monthly time frame. As you can see, we have a high which mitigated this breaker point, all right, a low, sorry, and then this low broke this structure. All right, as you can see, that same candle closed above this structure, and then the next 5 candles went bullish. Right, so this is clearly going to be a structure which before we could clearly say price is bearish is if price goes below this low that caused the manipulation that cleared out the previous strong high. Right, this is identifying the key areas within the monthly time frame, and then I move to the weekly time frame. This basically is what I do when I'm making my analysis. All right, so I'm talking kind of fast so that the videos don't end up too long and get you bored. But basically, these are very important informations you would need to guide you when making your higher time frame analysis. All right, so these are the basic rules I pay attention to. I'm coming from the monthly time frame and also paying attention to the past 5 candles on the weekly time frame. Okay, as you can see from the data here, from the monthly, we identified this structure correctly. And within this swing low, we have a clear order block resting at this point. Okay. And within this order block, we can clearly see that price would be going bullish, right? Because this is a structure which is identified on the higher time frame. And also this is a reaction which is showing clearly that price has been within the discount area of this internal range structure. Okay, so this is discount of this structure because this would be premium and this would be discount. Okay, but right now we can clearly see that price has been within the discount area of this same structure and also has been bearish. Okay, so there's every tendency that we could see some bullish reactions, which price could maybe move to mitigate this area or probably go higher. Okay, with this information, I move down to the daily time frame, which then helps me to scale through the closer candlesticks and reactions of this mitigation. Okay, as you can see clearly, we have a basic structure within these points. Remember, this is still within our 5 weekly candles, sorry. And within this candle, what do we see? We clearly see an area of exchange between supply and demand, which created a range, right? Which is going to be either a supply or a demand zone, all right? So an area of exchange is more like a change of character from a demand to a supply or a supply to a demand. As you can see previously, this was a swing low, all right? And the price mitigated that, but had a low momentum and was bearish on the higher time frame. So price broke this area. So this is clearly a supply and demand area. So we call it an area of transaction. This is mostly formed with a range. This is in-depth knowledge on supply and demand, and I will share that with you guys on a different video coming up within this channel. Okay, so on this basic information, we move down to the daily time frame, paying attention to the supply and demand areas, which I just clearly broke down for you guys here, and also the reactions we have from the counter POI. Right, so we know we are bearish. We're clearly very bearish, and we understand that price is also within a bullish POI on the weekly POI time frame, and we're looking for a reaction that could help us trade from this point to this point. Right, so that's what we do on the daily time frame, and then we'll pay attention to this. So we have this area and this area to focus on, forgetting about this, or even this point. Okay, so with this understanding, we clear out everything we have on our chart to make it more easier to scale through. And then we pay attention to this guy and this point. Okay, so this is what I do on the daily, and identify that fair value gap or that area which price could be filling to get to this point of interest. As we can see within this point, there's a little gap which we do not pay attention to. We don't basically have a POI at this point, but we can also pay attention to the structure which builds up around this area to give us the understanding if this point is going to hold or not. Okay, and at the same time, we pay attention to the structures coming out from here, which candle. Now, to do that, we have to find a strong low, which is going to be holding this structure. Okay, so and to identify a strong low, we know a strong low is basically with a structure like this, right? So the strong low is that low that breaks the high that created it, to form a new bullish range. So we call this a strong low because it's basically going to hold when price comes back there. So looking at this point of interest, do we find any strong low? And please pay attention. I just mentioned the third rule for you. Identify the strong and weak lows within the daily time frame before you move to the 4-hour time frame. Right, so I'm going to be stopping on daily time frame to make sure you guys don't get confused too much. I'm going to be going into details to describe what you use on the 4-hour time frame and the 1-hour time frame, not on charts, but I'm going to be doing that on a basic description, just to make sure you don't get too confused on how to do this on your chart. Okay, so we don't have any strong low here. As we can see, there was no low which clearly broke any high. All right, so this is all rejections. So from what we can see, this is not a strong low. All right, so with this understanding, we observe this low. All right, and then I will just pay attention to what stays within the range and the premium area of this range. Okay, as you can see, we have been able to identify the structure and area of interest just from the weekly, monthly, and daily. With this understanding, I move to the 4-hour time frame. As I said, I won't go into much details on the chart on the 4-hour time frame and below because those are lower time frame POIs and lower time frame structures, and those play mainly in the internal structure. All right. So what I do on the higher time frame, as to what this video is about, is identify the area of interest and also my obstacles and the trend which the structure of that particular time frame is playing out on. Now, as you can see, from what I've done from the weekly and monthly time frame, I have been able to identify what to do or what to expect. Okay, it's as simple as this. These are the basic things you have to understand when doing your higher time frame POIs and analysis and doing your trading on the higher time frame. You basically need to identify the range, structure, and the trend of that pair you're planning to trade, and then you pay attention to the patterns, all right, and whatever method you use to trade the lower time frame, because this method I've showed you doesn't really specify any strategy, all right, so you can play this whatever strategy you trade, as long as it's multiple time frame analysis you're doing. You can use whatever method you trade on the lower time frame, doing this simple basic multiple time frame checks, because this helps you to identify your areas of interest and also those areas to be careful of. Okay, so now you, I believe, understand the knowledge of premium and discount. All right. With that, like I said, the lower time frame is your lower and internal structure, and you should be just conscious of that and trading that. You shouldn't use those bias to judge the higher time frame. As you can see, if I was to pay attention to the lower time frame, I would clearly be looking to sell from here, because this would be the premium of an internal structure, while this would be the discount of that same internal structure. But these are all a part of 2 to 3 daily candles and not really significant on the monthly trend. All right, so this could just be within 1 week. And this knowledge could only help me to take probably a trade of 100 or 200 pips. Okay, doing that is clearly different from trading on the higher time frame, but this helps you to identify those areas which are stronger, because as you can see, the sell will be considered a risky trade. All right, the sell will be considered a risky trade because, one, we can see the trend line liquidity being built over here. All right, so I'm going to delete everything now so we get more space to study. All right, so this can be considered as liquidity trend. All right, and this is also within discount of the higher time frame POI. And you can clearly see price is currently mitigating its supply zone, which is possibly, there's every possibility that this could be heading to clear out this high. Okay, and this structure did not really give a significant break. Right, there was a close, but it did not really go that low to say this could be considered a strong high. And we can clearly see the reactions of this already. And that did not, this, as you can see, did not break any significant low either. So this is still a bullish structure. And looking at this, we could say, yeah, there's every tendency that the way could be going bullish. Okay, so this is not a strong sell, but this is still premium of this lower time frame range, right? This is the 4-hour time frame. Paying attention to this could give us an idea on how to take our next trade or how to go about on the lower time frame. So these are your basic rules to trading on multiple time frame analysis, and how to actually make your multiple time frame analysis. All right. Number one, on the monthly time frame, I list again, you have to pay attention to the key levels, right? Monthly time frame, pay attention to key levels. Key areas which you can find on the monthly time frame are going to be your support and resistance on the lower time frame, or your supply and demand areas, or your swing areas on the lower time frame, which you might be planning to take an entry from. On the weekly time frame, you have to pay attention to the structure, okay, and the first 5 candles or 7 candles within the weekly time frame that could be presenting the present trend of the market. Okay, so you have to pay attention to less candlesticks and more of what the structure is doing. Is it bullish and is it bearish? Okay, on the daily time frame, you now have to pay attention to the market trend. Right, try to identify what trend the market is on, and to these areas which you have identified on the weekly time frame and the monthly time frame, which is closer to the present price action. Right, understanding these basics, you then go to the lower time frame to look for whatever pattern your strategy might be based on, or looking for whatever method or theory you use to take your entries or pay attention to your areas of interest. All right, that will be all for this video. We have multiple series coming up, and do comment whichever video you would like us to go in depth into. J4SAS is an academy which is dedicated to simplifying technical methods like SMC, ICT, or YCOF. All right, so you can list whatever topic you are interested in for us to go into details on, and I will look into it and post the video here for you guys to watch. Thank you for joining us today. Right, see you on the next video.